Hey, we're going to be checking out Netflix. That's ticker symbol NFLX, currently at 33 or $333. The reason why we're coming back to this so quickly is because they just had their quarter one financial statements released. And so the last time, just to kind of check back to when we last looked at them, they were at 338, so the price actually fell down a little bit, kind of already hinting at maybe not the best performance. Uh, we had a buy point of 330. Resistance was expected next at 570 as like a strong resistance. Again, the last time we looked was on the 16th, and we saw a short-term uptrend, and then we noted the financials were coming out very soon. So right away, we see 333. That's kind of letting me know that uh, probably not going to see the best results on that first quarter. But if we look at just the 5-day chart, I just find this interesting that right around Thursday, late Thursday, and then first thing Friday, the stock just drops. And it continues to drop all the way until the results come out on Tuesday. And then all of a sudden it kind of flattens out. So it must not have been that bad, but I don't know. It just seems very interesting that all of a sudden uh, we don't see the best results, and I'll just give you a preview on that. Revenue missed by a little bit, and to broaden that, Netflix, I believe these are the original estimations. Netflix revealed it anticipated 8.24. They got 8.16. Not a crazy miss. It's less than expected, but I mean, that's pretty good when you're talking about billions of dollars here. The next one was the earnings. They actually beat the expectations, and they even beat their previously stated expectation of 2.84. So they actually won on this one. But in terms of Wall Street, they were way off. Wall Street thought or was expecting 305, and they came in at 288. And then the last thing, and arguably most important, was this subscribers. They thought that they were going to get 2.3 million new subscribers, but they only got 1.75. That is a pretty big miss, in my opinion, but there is a logical reason for that. Um, so again, I just think it's kind of funny or interesting how all of a sudden Friday, when it's very close, I mean, I'm sure that they had the financials in hand, and all of a sudden it starts dripping lower. Um, but who knows? Maybe just coincidence. So anyway, we're just going to go over some news. This one might be a little bit longer, just because I want to go through it as uh, sure-footedly as possible, and then we're going to go into the technical analysis. And before we do, if you have any questions, if you'd like to add any insights that I might have missed that you saw and want to share that, by all means, let me know in the comments. I would love to read that. But going back to the news, so clearly they had a, a less than expected quarter. Overall, still good in terms of, the expectation was here. It seems like for most part, they were like right there, just a little bit less than expected. And of course, the subscribers was a big hit. But I think what will happen is they're probably going to rebound. And the reason why I think that is because if we look at, uh, so in terms of the news, there's two main things happening here. They've recently launched this ad-supported tier, and they've also implemented this crackdown on password sharing. And so just a little recap of this, which is, both of these are the main focus of the news portion of this, is this ad-supported tier is new, and basically, at least in America, I believe you can get this ad-supported tier for something like $6.99, when a normal package for them is like $12.99, something like that. And so they now have this new lower cost tier, but of course there's going to be ads there. The second thing is this crackdown on password sharing. Now this one is very unique. I don't know if other Companies do this or have done this, but how they're going to do this password sharing crackdown is, uh, say for example, I have a Netflix account and I share it with you. I share it with, say, 5 people. Those 5 people, they don't live here hypothetically because they're just friends. They don't actually live in the same house as me, but yet they still have the password because, just wanted to share it with them. They, at some point, those 5 people, to stay on the Netflix account, basically unknown to Netflix, they would have to come to my house at least once every 31 days, log on to my Wi Fi, and then they're good for another 31 days. But even myself, the account owner, they are requiring me to. Let me actually back up a step. Me as the account holder with this crackdown of password sharing, I would need to pick a primary location, so my house, and I would have to log on to the Wi Fi at my house. And I think that's it. Once that's set up, though, myself, anyone I've shared the password with, they would need to log on to my Wi Fi once every 31 days to continue using Netflix. Uh, there is one catch. Not sure how this will work exactly, but um, if, for example, you were away from the house for over 31 days, you were going on vacation to some very far away place, weren't going to come back for 2 months, say, what would happen is after 31 days, you haven't checked in. For me, the account owner, I can request a um, temporary password or something that would allow me or some other person to continue using Netflix for another 7 days. Not sure what happens after that, but that is kind of the step. I mean, how often are you away from home for 40 days? But still, I'm sure it happens. That's why they set it up this way. Um, and so basically, if you weren't the account holder, and I think this is going to help them eliminate unwanted users, uh, if if you're away from the account for 31 days, and obviously you can't go back to that person's house, or even if you can, it's like it might be unreasonable. You might have moved 2 states away. You're not going to drive all the way to this person's house one day a month. You might, but in this case, you're not going to do that, or maybe someone got your password and you just didn't even know about it. It could be like an ex friend, a friend that you had, but you just don't even talk to them anymore, but yet they had that Netflix account. All of a sudden, in 31 days, they're going to get a message where they can either just never log on to your Netflix account again, or they can ask the account holder to let them continue using it for another 7 days. And right there, whoever the owner is of the account, they can either uh, provide that person with an extra 7 days and give them some temporary password, or they can just reject it and that person is done with their Netflix account. So you can kind of get the idea here of how a lot of people who likely are using Netflix for free, they might need to cut ties and either find a new friend that's closer by or just open a Netflix account themselves. And that's more or less the gist of the crackdown. So very interesting. Basically, again, just to link the two together now, is if people can no longer share passwords, and optimally Netflix would want them to um, create a membership with them. So if now you can't use your friends and you're also uh, on a budget, you can now join Netflix for $6. Uh, Seems pretty reasonable, but still, you might lose people that way or viewers that way. But, it's a happy medium. So basically, with the combination of this, we have to imagine Netflix users will skyrocket. You would think that they would just go up very drastically along with the revenue. The only caveat would be maybe the price per active member is going to decline because most members have maybe like the $10 fee versus this ad tier, which is like $6. So that's kind of the trade off with this whole thing. Overall, it should be very good for them. Uh, so if we continue along, as far as this crackdown, they've recently expanded it to Canada, New Zealand, Portugal, and Spain. It was previously tested and still, I assume, ongoing in Chile, Costa Rica, and Peru. They're planning on having this crackdown in the current quarter for the U.S. That's when things are really going to pop off, I think. Um, of course, the results will show for themselves. But now that we kind of have an idea of so we have Canada, New Zealand, Portugal, and Spain. That just is most recent, and I think before them was Chile, Costa Rica, and Peru. So we do have their quarter 1 results, and this is their regional information. This was straight from the website, by the way. I was very surprised to just see a spreadsheet, but this is regional information. And so if we look off here, we have like the United States, Europe, Latin America, Asia Pacific. And then right here, we have December. This is the full year. And then here's the most recent first quarter, 2023. If we look at US and Canada, there was a pop that happened last quarter for about 900,000 people. Everything you see here is in tens of thousands, except, of course, this figure right here, this average per membership. But it went off. December, I don't know if that was in preparation or if they really did launch it in Canada in this quarter. I the way the article read to me, I would have expected that to occur here in the first quarter of 23 as opposed to the final quarter of 22. But either way, we got to see a little bit of a pop here from this program. If we look at Europe, that also saw a big pop. And that was just from apparently 2 countries. There's many more. You got to figure there's Germany, Great Britain, England. There's a lot of those. France. So this can probably continue popping off, I think. And I think it's also important to just mention how you can see that while they're gaining members, the average revenue per member is actually falling. So this one went from 1637 to 1623. We have 1081 to 1043. That actually kind of seems like it's been a pattern, at least in the Europe division. That's kind of hard to read because of the page 2, but this is what I thought it would kind of more look like, is how you have this uptrend here going from 14, 15, 16, but then all of a sudden you come down a little bit. And then here you come down a little bit more. But let's keep looking. So Latin America had a couple countries, Peru and whatnot. You can see a big pop here. They actually regressed, which was probably a little unexpected for them, I would imagine, just because you see this big pop like you expected, but then within the next 3 months, people left that fast. They must have just wanted to watch their show and then just cut it. But either way, again, there's a lot more Latin American countries that they can push this out to. I think you'll see that rebound. And it might just be a first quarter thing. I mean, here's first quarter in Latin America again, down 351, and now we're up 450. I'll make this a little bit bigger. I don't know if it's kind of small for the screen, but hopefully that's better. And then Asia Pacific, New Zealand, I have to imagine, is lumped in here. And of course, I don't know if they push this out to Australia or the Philippines. I would imagine those are lumped in here. But they've been growing like crazy. This is turning into a very big sector for them. But again, we still see a pretty decent sized pop here, going from 1.4 million to 1.7 million. That's pretty good. let's see. And again, the price per membership goes down. So all in all, that kind of gives us a summary. And then here's like the 1.7 that happened this quarter. I think the reason why it was expected to be so high was the article goes into how um, they they were expected to put. Here's the prices, by the way. Basic with ads is what the ad tier one is, $6.99, and then the existing tiers, standard plan $15.49, basic plan $9.99. But somewhere in this article, or at least another article, it mentions that the plan was to roll this out into the United States in the first quarter. They gave it kind of like some test runs in the, I guess, third, maybe fourth quarter of last year, and the plan was to roll it out into America in the first quarter. But apparently, what happens is, I'm just wondering if this article goes into it. Um, this kind of goes into details. So we have this crackdown started in those countries we mentioned before. The U.S. may be next up in the first quarter. Um, Here's how it goes into. They'll need the home Wi-Fi, the primary location, once every 31 days. To bypass this, the main account holder will need to verify the device through a temporary passcode. When someone signs into the account from a device that is not part of. Oh, okay, this is interesting. When someone signs into the account from a device that is not part of the primary location, or the account is accessed persistently from another location, it will likely be blocked. So that's very interesting. To bypass this, the main account holder will need to verify the device through a temporary code. Once verified, the traveling member can watch Netflix for 7 consecutive days. Okay, so the password protections are actually a little more stricter than I thought. Um, Very interesting. So I can see why people would start buying this faster than later. Um, let's see, a couple of crackdowns. Netflix supported net additions. Yep. Okay. Um, yeah, some other news is they're going to stop their red envelope DVD rentals. This was a unit that's been going on for 25 years. They just said it's not really working out anymore. So they're going to stop that on September 29th. So that's, I don't know if people, I mean, clearly people still must use it, but um, if you're still using it, you're going to have to find something else very soon, which will stink, but uh, we'll get over it. But yeah, so uh, bringing it back to the main piece about the subscribers, um, I think the reason why it was projected so high was because we thought, or like the analysts were thinking, it's going to come out into America, and that's going to really spike this. To be, but again, maybe not, because the way these other countries have popped off in the past, if we go back to their financials, I think America is going to make it pop a lot harder. I mean, this one was a nice pop in just a couple countries in Europe, going from 500,000 to all of a sudden 3 million new users. That is crazy. But then, of course, this quarter, you can see it all drops off. Here's the U.S. Canada going from 900,000 to 100,000. Europe going from 3 million to 600,000. Latin America going from a huge spike, 1.7, down to a loss of 450,000. That was very unexpected. Asia Pacific still staying strong, but seeing a little dip, going from 1.7 to about 1.4 million new users. But I have to imagine once it comes to America, we're going to see a figure possibly this big, possibly all of these combined. Something like 6 million new users, something like that. Uh, I wouldn't be surprised. But that kind of gives a hint of what I'm thinking for this one. Um, and I'll give another reason why I think this one might be uh, setting us up here for success. Is well, before I say that it could be a key to success, what I'm hoping that they do in the near future, and we're looking at the income statement right now, what I hope they do in the near future is break out revenues. I think they're going to be required to soon, but I, again, I've never had Netflix, so I don't know if what ads they've used on their their app. I have to imagine not many, if any, and that's why they're coming out with this ad tiered uh, membership style. Uh, so yeah, I guess they just never had ads, and all this money was being generated by the monthly subscription, which again, that's a nice revenue thing for them. But if now they're all of a sudden get ads and they're pushing out ads to millions of users, they're going to make a ton of money on that. We're talking like billions of dollars in that alone. And so what I want to see is them break out this very generic revenues, and it might be broken out in a more in-depth income statement than what we're seeing here. But that's what I want to see. I want to see the revenues broken out between subscription fees and ad revenue, because I want to see if today if is ad revenue like $1 billion already. If it is, then okay, maybe I am being a little optimistic. But if ad revenues is less than $1 billion, I think we're in business for this one really popping off soon. Uh, but again, I think it's very early. That ad tiered system is very new. I think we are less than that. If someone does know that answer, what the breakout between subscription revenue and ad revenue, yeah, I'd be very interested in knowing that. I hopefully will have an answer next time we look at this. But that pretty much sums up that. This article. Is there anything else from here? Uh, Not really. So, yeah, let's just jump into the technical analysis. So this is setting up great, I think, in my opinion. So we have this upward trend. We're still within it. We're still within the range here of these gold lines. We previously marked out these horizontal lines, the green being a buy point. This was pretty much just based off the fact that there was some support back here in like early 22. Um, Not really much back, I guess a little bit back here in like 2019. Like this just seems like a pretty safe space. I think ultimately this is where it's meant to be again, between 470 and 570. But a safe middle ground, it seems, for them is right in this range between about 330 and 397. And we're right at the bottom of that. I think we're also in that uptrend. I think these results that we got is almost like a perfect setup, because, again, what I'm imagining is going to happen is they got the quarter one results, they missed. But you know what? They didn't put it out to America yet. And there's all these other countries that they didn't put it out to yet either. Plus, you have to figure that ad revenue, it's probably going to take a little while to reach its full potential. And with so many people jumping into that ad tiered sector, I just have to believe there's a lot of growth that's coming this company's way. And if people are going to hesitate right now, to me, I think it's a great time to buy. Again, we're right at that buy point, so it's almost like too good to be true. We're right in the middle of that upward trend, which, yeah, obviously we would like it to, like for this week specifically, we'd like to see it at like 312. That might be kind of out of the question because I'm sure I'm not the only one thinking of this company in this fashion. But again, we'll see how this plays out. I'm just gonna update my tracker here, just so we can have it updated. So I'm just updating. The current price is 333. I still have the buy point of 330. Resistance at 570, which is way up here. So a lot of room to grow for this one. And I think if we can get through about the 400 mark, this stock could really fly. Like we could see something like it just kind of trade up like this, and then all of a sudden it hits here, and then it like shoots off. Or actually, let me change that. What I think could happen is, we just kind of like trade up a little bit, keep flowing up, and then all of a sudden, oh wait, hold on. Let me try to time this like legitimately. I think it'll just kind of like trade sideways up over, what is it, the April 18th, so 3 quarters from now, April, May, June, July. So about like July, somewhere in like July, I think it'll hit a spot here. They'll get the results in, and all of a sudden it's going to like shoot off like this. Something like that. It's going to kind of go slow. All of a sudden America results are going to come in. It's going to shoot off. That's just a prediction for now. I'll keep this in, see how it actually plays out. These squiggles are probably going to get fixed a little later on, but this is really what I was getting at, is this big pop. I think that's in line for this company. But again, we'll continue to watch it, see how it goes. So for me personally, yeah, the actual buy point is 330. We might get there, but it's so close, and I think the potential for this one is great enough to outweigh $3. I'm probably going to buy something, maybe 3 shares. Maybe I can swing 3 shares on this, put $1,000 in it, but I think I'm going to at least buy 1 share. Just get in now, see how it plays out this next quarter, and see if we get a big pop. I think now's the perfect time, a whole quarter ahead. I like it. Bad news is going to be good news, I think, for this one. But yeah, that pretty much wraps this up. Here's the quick recap. I don't know if I should add another note here, but right now, just quick recap. Currently, it's at 330. I have the buy point of 330. Did I say that right? Currently, it's at 333. The buy point is at 330, and then a resistance point way out there at 570. So a lot of potential. We'll update the date on this too, and we're still keeping that short-term uptrend. If I had to put another note in there, something like expected high growth Q2, something like that. But again, we'll see how that plays out. That's just my personal prediction. Yeah, so let me know what your thoughts are. If you have a certain buy point on this one, what do you think about the crackdown or the ad tier system? Very curious to know. And yeah, if you have any questions too, feel free to share those. Otherwise, please like, subscribe, and I'll see you on the next one.